Hai, Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera semua. Welcome to PSA 3013 Public Sector Accounting. In this video, we will be discussing about accrual accounting. Now, let's begin. Okay, so in this video, we are going to look at the final learning outcome, which is to explain the issues in the implementation of accrual accounting in Malaysian public sector.
Although accrual accounting have been used in the private sector for a very long time, I think since forever, it is not possible to just simply adopt private sector accrual accounting in the public sector in total. Tak boleh kita tak boleh buat sekelip mata lah. This is primarily because there are a number of unique issues that arise when governments or public sector entities move from cash basis to accrual accounting. The government has certain types of assets and liabilities that do not exist in the private sector, such as the heritage assets, harta warisan kan, macam bangunan-bangunan lama tu, the military asset, infrastructure asset, and also the treatment of non-exchange transactions contohnya. So because of the unique characteristics of these assets and liabilities, therefore the type of valuation method to be used is also very important, especially from an economic analysis point of view. Recognizing the characteristics of the assets and liabilities that are present under public sector as compared to the private sector, we are going to look at what are the requirements under three accounting standards. The MPSAS 17, the PPE, Property, Plant and Equipment, MPSAS 31 that talks about intangible asset, and MPSAS 23 which is on revenue from non-exchange transactions. MPSAS 17 PPE prescribe the accounting treatment for property, plant and equipment. So the principal issues in accounting for PPE as outlined in this standard is in terms of the recognition of the assets, the determination of their carrying amounts, and the depreciation charges and impairment losses to be recognized in relation with the assets. So this particular accounting standard states that an entity that prepares and presents their financial statement using the accrual basis of accounting should apply this standard in relation to accounting for PPE, except when a different accounting treatment has been adopted in accordance with other MPSAs and with respect to heritage assets, because there are some flexibility that has been given by this standard in terms of accounting for heritage assets. However, the disclosure requirements shall apply to any heritage assets that are being recognized in accordance with this standard. The standard applies to PPE including for specialist military equipment and infrastructure assets. However, this particular standard does not apply to biological assets related to agricultural activity, because this is under the other MPSAs, which is MPSAS 27 agriculture, and mineral rights and mineral reserves such as oil, natural gas and similar non-regenerative resources. Okay, so MPSAS 17, Property, Plant, Equipment is based on IPSAS 17 as well, from the Handbook of International Public Sector Accounting Pronouncement. This standard applies to property, plant and equipment, including specialist
military equipment and infrastructure assets. A lot of researchers have actually argued that heritage assets do not match the definition of assets in accrual accounting. So the reason being is that the services provided by heritage assets are freely offered to the public or at a very minimum fee, but their maintenance costs are usually above the revenues that flow into the entity that maintains them. So kadang-kadang nak masuk satu-satu kawasan tu tak ada charge apa-apa pun kan, free saja. But the maintenance expenses is quite high. Alright, so for this reason, some authors would consider heritage assets as liabilities actually instead of asset. And some would argue that the heritage asset may become asset if their sale was decided. Tapi siapa nak siapa pula nak jual kan? Okay, so many would say that heritage asset actually should be regarded as liability or facilities as they do not satisfy the criteria for the recognition of an asset. Okay, if you can see here, the accounting standard as well as a lot of other literature have listed that the characteristic of heritage asset include that it has a very long life cycle, maybe hundreds of years. Okay, bangunan-bangunan bersejarah tu kalau kita tengok memang dah lama sangatlah usianya kan. It is more likely to increase in value over time instead of decrease. So depreciation is actually not an option. Okay, it seldom diminish over time due to wear and tear, normally without acquisition cost, and if it exists, the acquisition cost exists, it already long past scrap value. Okay, jadi government tak beli actually heritage asset ni, and it is not marketable, and the sale of heritage asset is actually prohibited by law, which means that because there is no active market, replacement value is not it's difficult to determine, to work out the replacement value. So based on the characteristic of heritage asset, many will argue that capital asset with attributes similar to those of the public goods such as heritage asset therefore should not be capitalized and included in the statement of financial position. Because of their public goods characteristic, heritage asset should be considered along with infrastructure asset. Nanti kita akan bincang as community asset, asset community, which require a specific accounting treatment. Other authors also argue that because of the difficulties in the valuation of heritage asset and restrictions as to their sale, macam yang saya cakap tadi, siapa pula yang nak beli bangunan bersejarah kan, and off balance sheet reporting is more appropriate rather than capitalization as an asset. Ada juga yang mengatakan bahawa as the managing entity usually does not have full control of the asset, such as with regards to their use and disposal. Okay, so the government actually does not have full ownership of the asset. They cannot sell, they cannot dispose. Therefore, heritage asset should be regarded as goods in trust. Itu another argument.
The Accounting Standards Board January 2006 discussion paper examines whether heritage assets are indeed assets from an accounting perspective and therefore should be reported in the balance sheet or should be recognized. So as you can see in the previous page, it talks about how many heritage assets do not provide cash inflow or future economic benefits, therefore should not be recognized as an asset. This is especially true for assets that are considered to be inalienable. Inalienable, which means that the entity cannot dispose the assets without external consent because they are prohibited to do so. They have restrictions under laws and whatnot. However, it is also argued in the discussion paper that heritage assets are central to the purpose of an entity, for example, to a museum or to a gallery. This is because without this heritage asset, the entity could not function. For example, an artifact held by a museum might be realizable for cash. It might also generate income indirectly if you charge admission fee, for example. Or you can also use the artifact for reproduction rights. However, and in most cases, much more importantly, the museum needs the artifact to function as a museum. This means that the artifact itself has utility. It can be displayed to provide educational or cultural experience to the public, or it can be preserved for future display or for academic or scientific research. This indicates that the future economic benefits associated with such artifact are primarily in the form of its service potential rather than cash inflow. And as such, the heritage asset therefore meets the definition of an asset and therefore should be recognized. Alright, so because of this limitation of determining whether the heritage asset has future economic benefits or not, MPSA 17 does not require an entity to recognize heritage asset that would otherwise meet the definition of and recognition criteria for PPE. So this means that this standard gives the leeway or the option for the entity to either recognize or not recognize heritage asset. However, if an entity does recognize heritage asset, it therefore must apply the disclosure requirements outlined in MPSA 17 and may but is not required to apply the measurement requirements of the standards. So the standards also further discuss the characteristics of heritage asset, as you can see in paragraph 10 here in this particular page.
Okay, so another thing that is important to point out is that some heritage assets actually have future economic benefits or service potential other than their heritage value. For example, a historic building can be used for office accommodation or office purposes. Macam bangunan apa tu kat KL tu, Sultan Abdul Samad saya pun tak tahu. So in this case, they may be recognized and measured on the same basis as other item of PPE, which means that the asset shall be measured at its cost, and if it is acquired through a non-exchange transaction, the cost shall be measured at its fair value as at the date of acquisition. Okay, so apa non-exchange transaction ni? Contohnya macam apa tu, ada orang bagi bangunan contohnya kan kepada government. So this means that that particular asset must be recognized at its fair value. Okay, in terms of military assets, for example, the aircraft carrier, the ships, submarine, ada macam-macam lagi lah contoh military asset. The difficulty lies in the possibility of premature destruction. Kita tak tahu kan setakat mana kita boleh guna aircraft tu. Contohnya, and difficulty to estimate the timing when such destruction might occur. So this give rise to a problem on whether or not that particular asset
or military asset should be capitalized and depreciated. So because we cannot actually predict the useful life of a military asset. Tak tahu kan, tiba-tiba je dah dimusnahkan contohnya. Okay. Alright. Apart from that, it is also difficult to define what exactly constitute a military asset, and the secrecy of in-house development of new military system prevent research from being capitalized. Sebab kadang-kadang dia secret kan, kita tak tahu, jadi diorang tak nak disclose pun that kind of information. So the US government, for example, differentiates between the military general purpose assets such as transportation and its military specific assets such as the jet fighter, the aircraft and whatnot. And the specific assets are not capitalized and depreciated. They are actually expense. Okay. Other countries generally view that all military equipment should be capitalized and depreciated. And if it is destroyed, kalau tiba-tiba kan musnah, they need to be written off as an extraordinary items. Okay, so in this case, NPSA 17 agrees that specialist military equipment or specialist military asset will normally meet the definition of property, plant and equipment. So contoh macam submarine, tu specialist military equipment, and therefore should be recognized as an asset in accordance with the standard. Okay, now we look at the infrastructure asset. Contohnya macam jalan, okay, public road, network, okay, highways, railway. So this involves asset which incur high cost to build, and have extremely long useful life. Seperti yang contoh-contoh seperti yang disebutkan tadi lah. So problems associated with infrastructure asset include, for example, deciding on the appropriate depreciation schedule, sebab extremely long useful life. Extremely long tu berapa lama? 100 tahun, 200 tahun, 300 tahun. Okay. Treating the original investment accordingly and maintenance expenditure. So how much should go into the acquisition cost or the original investment, and how much should go to the maintenance. Estimating the original acquisition cost, macam yang sebutkan tadi lah, if historic cost method is used, and selecting the best suitable valuation method. So under IPSAS 17, okay, infrastructure asset need to be revalued every 5 years except where more frequent valuations are necessary. So each component of an infrastructure asset with materially different useful life from other component is accounted for as a separate asset and therefore depreciated over their own useful life. Okay, jadi NPSA 17 pun samalah, they agree that the infrastructure asset actually meet the definition of PPE and should therefore be accounted for in accordance with the standard, meaning to say that they have to be recognized. Jadi dia bagi contoh lah, contoh karakteristik of infrastructure asset dan contoh infrastructure asset seperti road network, sewer system, water and power supply system, communication network. Jadi semua-semua ni perlu di capitalize and depreciated according to NPSA 17. Okay, NPSA 31 talks about intangible asset. Okay, so it prescribes the accounting treatment for intangible asset that are not dealt with specifically in another standard such as under NPSA 17, contohnya PPE. Okay, because some intangible asset may be contained in or on a physical substance such as computer software, legal document, license,
pattern, film, untuk heritage asset contohnya kan. Okay, so to determine whether an asset should be classified as either tangible asset, okay, therefore goes under MPSAS 17, or intangible asset, therefore goes under MPSAS 31. The public sector entity must use their judgment to evaluate which element, okay, the tangible element or intangible element is more significant. So this is especially important if a particular asset contains both tangible and intangible element. So for example, the MPSAS give the example of a navigation software for a fighter aircraft. Okay, the justification is that because although this is a software, okay, so usually when we view software, we are going to classify this under intangible asset, okay, bawah development expenditure. But then because the navigation software for the aircraft is actually a significant part, an important part of the aircraft. Yalah, kalau tak ada navigation software tu macam kita nak operate kan. Therefore this asset is treated as PPE instead of intangible asset. Okay. However, if the computer software is for example the operating system is not part of an integral part of a related hardware, therefore it can be treated as an intangible asset. So based on this, it is actually up to the entity to it is up to their discretion to use their professional judgment to assess the condition and position of the asset, so that they can classify the asset as either under the PPE category or the intangible asset category. Okay, again similar to MPSAS 17, MPSAS 31, when looking at heritage asset or intangible heritage asset, does not require a public sector entity to recognize intangible heritage asset that would otherwise meet the definition and recognition criteria for intangible asset. So therefore, this means that it is not compulsory, mandatory for the entity to recognize intangible heritage asset. So what are the examples of intangible heritage asset? So this is also given in MPSAS 31. So contohnya dia bagi the recordings of significant historical events, okay, the film of the audio recording, video recording, tak kisahlah kan, and the rights to use the likeness of significant public person, for example on collectible coins or stamp. Contohnya ambil muka siapa-siapa ke, jadi collection untuk stamp ataupun shilling dan sebagainya. So these are examples of intangible heritage asset. Finally, I will talk a bit about non-exchange transaction or revenue from non-exchange transaction that is under MPSAS 23. So because you have heard about non-exchange transaction, which is one of the unique characteristics of public sector accounting. So basically non-exchange transactions do not exist under private sector. So in order for you to understand what is non-exchange transaction, it is important to define exchange transaction first. So exchange transactions are transactions in which one entity receives asset or service or even liabilities, have their liabilities extinguished, and directly gives approximately equal value to another entity in exchange. Okay, so exchange or revenue from exchange transactions is governed under MPSAS 9. Okay. Meanwhile, non-exchange transactions are defined as transactions that are not exchange transaction. Okay, macam mudah pula definition ni. So in a non-exchange transaction, an entity either receives value from another entity without directly giving approximately equal value in exchange, or gives value to another entity without directly receiving approximately equal value in exchange. For example, a working citizen in Malaysia will pay annual income tax of say berapa, 10,000 ringgit. He may not receive services from the government in equal value to what he has paid in income tax. So this kind of transaction is referred to as a non-exchange transaction.
We already know that public sector entities receive revenue from both exchange and non-exchange transactions. Exchange transactions are transactions in which one entity receives assets or services, or has liabilities extinguished and directly gives approximately equal value, primarily in the form of cash, goods, services, or use of assets, to another entity in exchange. Typical exchange transactions are the purchase or sale of goods or services based on market prices, which is similar to commercial transactions or private sector activities. Examples of revenue from exchange transactions are the sale of goods or services, including the sale of land and property held for resale, the rendering of services such as the provision of housing and the management of water facilities, and the use by other of entity asset yielding interest, royalties, and dividends or similar distributions. MPSAS 9 prescribes the accounting treatment of revenue arising from exchange transactions and events, with the main question being when to recognize revenue. The standard prescribes that revenue is to be recognized when it is probable that future economic benefits or service potential will flow to the entity and that these benefits can be measured reliably. For example, revenue from exchange transaction can be recognized once the rendering of services on percentage of completion method has finished, the sale of goods when significant risk and rewards of ownership and effective control has been transferred, on interest on time proportion basis using effective yield, when royalties earned, or when dividends right to receive payment has been established. Okay, now let's have a look at this example of exchange transaction, a developer contribution infrastructure. Let's assume that there is a city. Okay, this is the recipient. The city gives a piece of land valued at 10 million ringgit to a developer. So the developer is a provider of service in this example. The job of the developer is to construct an industrial park. In return, the developer assumes the cost of installing roads, power lines, water and sewer lines, and other infrastructure on site. Once the industrial park is completed, the developer is then to give the infrastructure back to the city, excluding the land, and the total of this infrastructure is approximately 9.5 million ringgit. So you can see that there is an exchange of although the value is not the same, but it is approximately 10 million ringgit. So this is an exchange-like transaction that is lent for the constructed infrastructure of approximately equal values and therefore is accounted for as an exchange transaction. So the assets and revenues are then to be recognized once the exchange occurs. Okay, one more example on exchange transactions. This is regarding a research grant. A large corporation that makes cleaning products, the large corporation is the provider of the grant or the provider of the fund, gives money to an agency. An agency is the recipient to conduct a research on the ability of a certain chemical compound to quickly remove graffiti. The corporation stipulates that the research results are to be shared with the corporation before being announced to the public, and that the corporation has the right to apply for a patent on the compound. So this means that whatever the results or the findings of the research belongs to the corporation. So this is another example of an exchange transaction. In return for its gift, which is the grant, the corporation receives the right or future benefits to profit from the research results. Therefore, in this case, the assets and revenues are to be recognized when the exchange occurs.
So MPSAS 23 addresses revenue arising from non-exchange transaction. Okay, so revenue arising from exchange transaction, as I said before, is under MPSAS 9. So while revenues received by public sector entities arise from both exchange and non-exchange transaction, however, the majority of revenue of governments and other public sector entities is typically derived from non-exchange transaction, and this what makes public sector entities unique. So examples of such non-exchange transactions are transfers, okay, whether cash or non-cash, including grants, as shown in the example given previously, debt forgiveness, fines, bequests, gift, donation, goods and services in kind, and off-market portion of concessionary loans received, macam yang diterangkan tadi. And also example or revenue that can be derived from non-exchange transaction can also include tax.
In most transactions involving the private sector, there is an exchange of approximately equal value. But in the public sector, most entities undertake activities or transactions where they receive resources and provide no or nominal consideration directly in return. So these are clearly non-exchange transactions. For example, taxpayers pay taxes because the tax law mandates the payment of those taxes. Jadi kena bayar. While the taxing government will provide a variety of public services to taxpayers, it does not do so in consideration for the payment of taxes. So the taxpayers will or can receive services which are not of equal value to the taxes that have been paid. Okay. Apart from that, there are also non-exchange transactions where the entity may provide some consideration directly in return for the resources received, but that consideration does not approximate the fair value of the resources received, known as transfers. Transfers may include grants, debt forgiveness, fines, bequests, gifts, donations, and goods and services in kind. However, we still need to be very careful. If an agreement stipulates that the recipient entity is to provide approximately equal value in exchange, the agreement then is not a transfer agreement but actually a contract for an exchange transaction that should be accounted for under MPSAS 9. Contoh macam research grant yang kita tengok tadi. Alright, so now these are some of the examples of transfers which actually can be obtained from MPSAS 23. The first one is debt forgiveness. Lenders will sometimes waive their right to collect a debt owed by a public sector entity, and this will effectively cancel the debt. This is also known as debt forgiveness. For example, a federal government may cancel a loan owed by a local government. In such a situation, the local government recognizes an increase in net asset because a liability that it previously recognized is now extinguished or cancelled. Meanwhile, revenue arising from debt forgiveness is measured at the carrying amount of the debt forgiven. Next, we have fines or denda. Normally require an entity to transfer a fixed amount of cash to the government and do not impose on the government any obligations that may be recognized as liability. As such, fines are recognized as revenue when the receivable meets the definition of an asset and satisfies the criteria for recognition as an asset. We have also bequests, wasiat. These are transfers made according to the provisions of a deceased person's will. They are recognized as assets and revenue when it is probable that the future economic benefits or service potential will flow to the entity, and the fair value of the asset can be measured reliably. And we also have gifts and donations other than services in kind. These are recognized as assets and revenue when it is probable that the future economic benefits or service potential will flow to the entity, and the fair value of the asset also can be measured reliably, which meets the definition of asset. In some circumstances, a particular transaction can be a combination of both exchange and non-exchange transactions. To give you an example, an entity receives 5 million ringgit funding or loan from a multilateral development agency. The agreement says that the entity must repay 4 million of the loan received over a period of 10 years at 5% interest. Okay, so this 5% interest is actually much lower than the market rate for a similar loan, because the market rate for the interest is 11%. So in this scenario, the entity has effectively received a 1 million grant. Okay, the total of grant received is actually 1 million. That is 5 minus 4 million in repayment. And it has entered into a 4 million concessionary loan, which attracts interest at 6% below the market interest rate for a similar loan. Okay, so in this particular situation, the 1 million ringgit grant received and also the off-market portion of the interest payment in terms of the agreement, so the interest payment is 5%, is the non-exchange transaction. Okay, the contractual capital
Okay, and the interest payments over the period of the loan. Okay, the contractual capital is 4 million ringgit, and the interest payment that is 5% over a period of 10 years are exchange transactions.
This excerpt is taken from MPSAS 23, Revenue from Non-Exchange Transaction, in which the recognition of both assets and revenue from non-exchange transactions are outlined. If we fast forward in this standard, paragraph 30 provide the definition of asset that is in line with MPSAS 1. While paragraph 31 state that an inflow of resources from a non-exchange transaction other than services in kind that meets the definition of an asset shall be recognized as an asset when and only when it is probable that the future economic benefits or service potential associated with the asset will flow to the entity and that the fair value of the asset can be measured reliably. Meanwhile, paragraph 44 and 45 states that an inflow of resources from a non-exchange transaction that has been recognized as an asset shall be recognized as revenue, except to the extent that a liability is also recognized in respect to the same inflow. So it really depends on the situation. As an entity satisfies a present obligation recognized as a liability in respect of an inflow of resources from a non-exchange transaction recognized as an asset, it shall then reduce the carrying amount of the liability recognized and recognize an amount of revenue equal to that reduction in liability. Okay, so if you couldn't understand how to do the accounting treatment, the next example will give you an illustration on how this will be recorded.
Assets may be transferred with the expectation and or understanding that this asset will be used in a particular way and therefore that the recipient entity will act or perform in a particular way as well. Where laws, regulations or binding arrangements with external parties impose terms on the use of transferred assets by the recipient. These terms are called stipulation. A key feature of stipulation is that an entity cannot impose a stipulation on itself, whether directly or through an entity that it controls. Stipulation relating to a transferred asset may be either conditions or restrictions. While conditions and restrictions may require an entity to use or consume the future economic benefits or service potential embodied in an asset for a particular purpose. So this is what we call as the performance obligation, meaning that the economic benefit of the asset can only be used for certain purpose. Only conditions require that future economic benefits or service potential be returned to the transferor in the event that the stipulation is breached. So this is what we call as the return obligation. Jadi kena pulangkan balik kalau tak dapat fulfill agreement tersebut.
Okay, so now let's look at the previous example that we had. Okay, we have this non-exchange transactions, one with a condition on the transferred asset, one with a restrictions on the transferred asset. So in this example, we have a local government, Majlis Perbandaran Kajang, that receives a conditional grant of 20 million from the federal government or national government to purchase buses to increase the efficiency of public transport in the Kajang area. So the condition of this grant is that it has to be repaid if the grant is not utilized for the very specific purpose. Okay, that is for the purchase of buses before the end of the financial year. Okay, so MPKJ will recognize the asset, that is the receivable of 20 million ringgit, and a corresponding liability. Okay, that MPKJ has not yet meet the condition attached to the grant. So although they have received that 20 million grant, but they have not yet purchased the buses, right? So what happened is that they will debit the asset and credit the liability because the amount has not yet been used, deferred income of 20 million. If MPKJ purchases 18 million ringgit of buses during the financial year, the condition attached to the grant will be partially satisfied, and consequently liability will be reduced to 2 million. So the liability now becomes only 2 million because we have used up 18 million ringgit. So as that is the remaining amount of the obligation that may have to be repaid. Okay, so this will remain in their books. As the liability is reduced by 18 million, this will result in a corresponding increase in revenue. So 18 million juga as the present obligation is satisfied. Okay, now let's see the other example when we have a restriction on the transferred asset. The 20 million grant received by MPKJ does not specify that it has to be returned to the federal government if not used to purchase buses. Okay, so boleh ambil lah. Although the federal government can turn to the courts to enforce the stipulation in the contract, there is no requirement in the contract that the grant has to be returned to the funder, okay, if not used as per the agreement. So this is what we call as the restriction on the grant. Okay, so as this is a restriction, no liability is recognized. So in this case, MPKJ can then recognize a receivable or an asset and a revenue of 20 million in its book. So debit asset, credit revenue 20 million. Sebab nilai itu tak perlu dipulangkan semula kepada federal government. Okay, now let's look at this example. This is a private donation with a condition imposed. An individual, which is the provider, promises in writing to give 1 million ringgit to the town library, which is the recipient, for the construction of a new wing, provided that the library also raises an equal amount of donations from others. So this example illustrates the characteristics of voluntary non-exchange transaction. However, the fulfillment of a requirement, that is the library need to raise 1 million ringgit from another party, is necessary for the transaction to occur. So the library can recognize a receivable, that is an asset, and as well as a revenue for the donation of the individual of 1 million ringgit when the library has fulfilled the condition, that is when another 1 million ringgit is raised. Okay, so another example of non-exchange transaction is a private foundation grant, as you can see in this page here. A university receives funding from private foundation to conduct scientific research for the purpose of discovering planets. The university is required to submit a summary of the research findings to the private foundation at the end of the research or after they have completed their research. But the university is allowed to retain all rights to the findings, and they also have the permission to publish the findings if they want to. So based on this example, we can see that the private foundation does not receive any direct benefit or value in exchange for the resources provided. So the results of the scientific research is for the benefit of the society at large, and is not directly obtained by the private foundation. So in this scenario, we can see that such arrangement is actually a non-exchange transaction. So the university can recognize a receivable or an asset and a revenue for the funding when it received the amount from the private foundation.